Welcome to the ICT Mastery Blueprint. I don't know what episode this is, but we're going to be talking about open low high close and open high low close. Now, some of you may know what this is. I would still watch this video because I'm going to inspire you to study the depths of this kind of concept because it will make a difference in your trading. And for those of you who do not know what this is, I'm going to break it down for you because this is something that every single trade needs to at least have an idea about. You need to understand which candle and which open low high close or open high low close you are trading, and it will increase the probability of your trades if you can find some way to align. Now, you don't have to trade this exact model or make a model out of it, but you do need to align with it whether you like it or not. So without further ado, let's get started. What is open low high close and open high low close? So it's an acronym that stands for open low high close and open high low close. It's very simple as to what it represents. It represents the sequence of how a bullish candle or a bearish candle can form. For example, a bullish candle or an up close candle, meaning it closes higher, has an opening price. So the candle starts and then it's printing a low, and then it's going to print the high and then the close. For the open high low close candle, which is a down close candle, meaning it opens and closes lower, it opens, prints a high, and then prints a low, and then closes. So if you go back to the image that we studied, you can see this bullish scenario. The candle opens, prints a low, and then it'll move higher, printing a high, and then the close. Same for the bearish candle, but we have the open up here because remember it's a down close. So it opens, prints the high, so opens, prints the high, prints the low, and then closes. What is the importance of this? I'm about to blow your mind, okay? Imagine this scenario. Listen very closely. Forget what it looks on the screen. Focus on me. Imagine this scenario. If I told you that the next, let's say, hourly candle is going to be up close, let's say 10 a.m. candle. If I told you the 10 a.m. to 11 a.m. hourly candle in electronic trading hours is going to be up close, this information tells you exactly where and when to know to look for your setup to buy. How? How do you know? How do you know? Because let's go back to the image. If this represents a 1 hour candle, I think I actually have this perfect. So I actually have a 1 hour candle here. So what do we know about open, low, high, close? Remember, this is a scenario where you know for sure it is going to close higher, okay? So what can you do? You can pair this with some sort of concept to get very high probability trade entries. Listen very closely. The opening price of the candle, as demonstrated, was right here. So the candle opens. What do we know? We're waiting. Now, we don't know. There's two things we don't know. We don't know where the high is going to be exactly, and we don't know the close. But what we do know is it is going to open, right? It's going to go lower at some point, right? That's two things we know. And then from that lower point, it's eventually, at some point, going to start trading higher. It doesn't matter how high. It doesn't matter where it's going to close. But what we know for sure is it is going to open. It is going to move lower. And at some point, it is going to move higher. We can use this to our advantage, especially if it aligns with our bias. So if we have an hourly candle that we're expecting to close higher, we can look at the opening price, mark it out on your chart, and we'll do examples of this. We wait for it to move lower. You have to wait for that. If you don't wait for that, then you're entering too early. Open, low, and then this is now where you look for your signatures that price is going to start printing higher. You don't need to know how high. You don't need to know exactly where. You just need to know that after trading lower, remember, this is a scenario where we know it's going to be bullish. You can start looking for your signatures, which we already talked about, our market structure shifts, breaker blocks, CISD. We talked about fair value gaps, inversion fair value gaps, IRL, ERL. We talked about all that stuff. You can start looking for those signatures now because you know it's going to move higher from this point. It has to. It's going to print higher. Now, obviously, we don't have the power of hindsight, and we don't know the hourly candle is going to be bullish. This is where bias comes in and drawn liquidity comes in, right? You never know 100% sure. But if you have an idea or a narrative in play where you think price can go higher, then you wait for this, right? And you get higher probability trades. And I'm not going to cover the bearish example, but same thing. You wait for the candle to open, it's going to print higher, then you wait for your signatures that it's going to trade lower. Remember, we're not trying to predict the close. We don't know the close. We don't know the low. But what we do know is it's going to open, it's going to trade higher, and at some point it's going to deliver lower. That's what we know. We can use that to our advantage. So what open low high close and open high low close to look for? All of them. Quite literally all of them. This concept is fractal. You could use this on a yearly time frame. Every single year, the yearly candle is going to open, it's going to print a higher low, and at that point, once that higher low is printed, it's going to deliver the other range. Every single year. Same with every quarter, every month, every week, every day, every 4-hour candle, hourly, 15-minute candle. You can even use this on the 1-minute chart because you can use it to print entries. For example, if you're looking for an entry, you can wait for the next candle to open, trade lower, and as soon as it trades lower, you buy because you know it's going to be bullish. You get a more precise entry that way, right? So you can use this on any concept, right? Obviously, you can use this to help frame bias. You can use this to help frame your weekly narrative, your daily bias, maybe your session bias, any drawn liquidity. You can use this on any time frame. So the key here is, and I'm blocking this slightly, the key here is you want to align your model or your trading system with this concept. Because every single candle, unless it's going to literally do this the entire time of the candle, right? Obviously, the larger the range of the candle, the higher probability and the higher risk to reward trade you can get, right? That's why you want to understand market conditions. Are we ranging? Are we expanding? If we're expanding, then you get really good risk to reward setups. If we're not expanding, then you don't. But for the most part, you want to make sure you understand the open high low close or open low high close that's being printed for the trade that you are taking. For example, right? If the open low high close is a daily candle, and you, let's say we're looking for open low high close on a daily candle, and you are taking shorts. Now that's okay. You can still find shorts, but just know that the daily candle is going to print higher because it already opened and went lower, right? So you kind of want to align with the higher time frame candles because that's where you're going to find the best risk to reward and higher probability trade setups. So this is how you avoid getting caught up on the lower time frame. If you ever feel like you've taken a trade and it just prints against you very quickly, the higher time frame candle was against your narrative, right? And you were trading the wrong candle or the wrong direction. You can actually make a model out of this. So how do you make a model out of this? Let's say this is an hourly candle. You can see the candle opens right here. Small move higher, lower, and then we get expansion. So at this point, we know we're bullish. We know we have an objective higher. We opened, we went lower, and then we got a breaker, a CISD. So what are the chances that this setup is going to fail? Pretty low, because remember, we know we're going to print higher. That's the power of bias, drawn liquidity, and narrative. Now, again, I'm telling you how to potentially build a model around this, or at least align with the higher time frame. But this is exactly how you do it. You'd wait for the candle open that you're trading, the one that you have a clear objective for, right? Don't trade a 15-minute candle or an hourly candle and look for 1,000, 2,000 point move. That's not going to happen, right? But if you're trading an hourly candle and you see, some relatively close level that you think is an objective, well, then you can use this model. Wait for the open, wait for it to trade lower. If it goes higher right away, doesn't matter. You wait. You wait for it to go lower, below the opening price. As soon as you see a breaker or a CISD above, take your entry, target your objective. If you get a really large expansion, then you get really good risk to reward. If it's a more small day, you probably don't get as good risk to reward. I'm not saying trade this model, but for the most part, most of your models are going to align with this kind of concept, whether you like it or not, because this is simply how the candles print, right? This is what we're trading. So let's take this, let's move to the charts, and I'm going to give you some examples because this is quite literally my model pretty much. Okay, so here I am on the quarterly chart, so the 3-month chart. Now this is actually inspired by someone named Jacob who just recently covered something like this. I'm not here to steal any of his concepts or anything. It's a pretty simple concept, but I want to just teach you guys the fractality of the open, low, high, close. So over here, very obvious, we have a candle that takes out the previous quarter high and we close below, right? We get a sort of rejection, as you want to say. If you go to the daily chart and you want to look what this looks like, basically we took out the buy side and then we got a strong CISD. So however you want to look at it, doesn't really matter. The premise is the same. We can now expect, or let's say in hindsight study, it doesn't matter for the purpose of what I'm showing, that we can expect a open, high, low, close candle for the next quarter. And as you can see here, we get as you can see here, we get an open, low, high, close quarter candle. So we're not here to talk about bias. We're here to talk about open, high, low, close. So let's mark out the opening price of this quarter, okay? Let's go to the weekly time frame. So this obviously is not demonstrating it accurately, but I believe the opening price is right here. So look very closely what happens. This is your quarterly opening price. Try to remember in the PDF when I drew that bearish candle, this is your opening price. This is your first week of January. The market opens, the new quarter starts. We have consolidation, and then we get a move higher, okay? After we get that move higher, we take out liquidity right here. So this is weekly chart. Remember, this is weekly chart stuff. We take out liquidity right here. We trade into this wick, rejection block, doesn't really matter. We're not really, remember, we don't know how high it's going to print. All that we know is it's going to go lower. So what do? We wait for it to go higher, and we wait for our signatures. Well, where's our signature? We have a weekly CISD right here. A weekly CISD right here, okay? So we have a weekly CISD, we have an open, high, and we're bearish. What are the chances of us coming all the way back right up here if we're going to expand lower? Very low, right? Now, I'm not talking about entering swing trades or anything here. I'm just simply demonstrating that we opened, we went higher, and the rest of the quarter we went lower. We're not trying to predict the lowest low. We're not trying to predict the close. We're simply trying to align with a bulk or the majority or some of the position moving lower here, right? That's all we are trying to do. Let's go over another example. I'm not going to cut the recording here, so bear with me as I find a monthly candle. And obviously we're studying hindsight, but that's okay. That's how you can try to start studying these concepts. So let's go to, I don't know, let's just pick a random candle. I don't even know. So we have Tuesday, March 1st right here, okay? So what do I see here? We'll study the open, low, high, close of this March candle from whenever. It doesn't really matter. So March 1st, 2022, this is the opening price. What happens? We trade lower. We take out this liquidity. Now remember what I said, and I'll say it again. We're not trying to predict the low. We are simply waiting for confirmation that the low has been put in, and we're trading the higher. We don't know how high, we don't know the close. We simply know that it's likely to trade higher, right? So we open right here. This line right here represents the opening price in March. We trade lower. We take out a liquidity. We reject it once, twice, and then we get a strong CISD from that level. Well, that's what we're looking for. We took out liquidity, and if you want to study the market structure, right, we have the inversion here, we have the CISD, we have the breaker. This is a high probability long candidate. Market trades back into the OB, and we trade higher. This is monthly power of 3, or your monthly open, low, high, close. You can use this to paint pictures. Let's do another example on the 4-hour chart, okay? So this looks like a nice juicy candle. I think this is an FOMC day, so let's study, all right? Again, so let's just say, for example, we're bullish because we see really strong bullish order flow. We have obvious equal highs right here, so for some reason we're looking for these levels. Again, we're just studying the open, low, high, close. Let's mark out the opening price of this candle, and let's drop to, let's just say the 15. It's not going to let me drop. Okay, no problem. We can study it on the 4-hour time frame. So what do we have here? This candle opens at this price. It trades lower. Now remember, we're not trying to predict the low. We're simply waiting for confirmation that it might start to trade high. We manipulate or go lower below opening price all the way to this 4-hour bullish fair value gap in discount, and then we start to expand higher towards the objective. Where is your entry going to form? Somewhere in this price range. Wherever the breaker or the CISD or whatever your model is, the inversion, maybe it's SMT, whatever it is somewhere over here. That's where it's going to form. Because this candle did this, and then at some point did this. And this would be your breaker, right? But that is the power of open, low, high, close, open, high, low, close. Let's go over a trade example where you can actually put on a sample trade. Okay, so very simple example here. I have the 9:30 open, low, high, close. Whether you want to do that as a 30-minute candle or a 4-hour candle in regular trading hours, it doesn't matter. It's the same thing. The market opens here at 9:30. We go lower. Where do we go lower to? Doesn't really matter in this case. We can just use this low, for example. You can use this old fair value gap. I'm sure there's something here, but we don't even need that because all we're here to do is demonstrate the open, which is right here. So let's mark that out as open. The market trades lower. Remember, you have to be bullish. That's the key of this, right? But if you're expecting higher prices, well, what happens here? We open, we go lower. We have equal highs up here, which is a really nice objective, right? And then we get a CISD, which is right here. So this is your CISD, 1, 2, 3 down close candles trading in to take that low. You also have a breaker block, which is right here. So you have a CISD and a breaker below the opening price, and we hit a higher time frame level. This is a high probability long. How could you enter a trade like this? Now, it depends on your criteria. For me, when I'm trading a reversal, I like to use a breaker or a CISD. I'm happy with either. They both pretty much have the same function. So how could you do this? Now, listen very closely, because what I'm about to show you is probably going to help you. So at this point in time, right here, we have and let's put a dotted line here. We have the confirmation of the CISD, right? The confirmation of the CISD and the breaker block. For simplicity's sake, let's just use the CISD. So the CISD is right here, and your order block will be right here. This is your bullish order block, these 3 down close candles, okay? And this level is your CISD. So how can you use open, low, high, close to your advantage when it comes to entries? This is what you're going to do. It's very simple. We're looking for an entry now. Now we can buy it right here. This is a little bit aggressive. You don't get the best risk to reward, but you still get 1.7. Obviously, your stop doesn't have to go all the way down here. For example, you could cover just the breaker block, which is this candle right here. Your stop loss can cover maybe the low of this fair value gap. Maybe you can identify this as a breakaway gap, and you can put your stop at the low of it because it shouldn't trade all the way through. Maybe you are really aggressive and you say, you know what? I don't even think we trade to this fair value gap at all. It doesn't really matter. We're not talking about stop loss placement, but we're talking about how can you potentially get in on a move like this. Because we now identified that the market is likely to trade higher, what we can do is wait for the next candle to tick down, and we buy it as it's coming down instead of buying this candle as it's trading up. Why? Because we can get spread and slippage on our side now. We're buying it as it's coming down. So we're going to get a better fill on this candle. Notice what the next candle does. It opens, puts in a low. Where does that low go? Trades right into the OB. Now you can put a limit order here if you want. I personally use market orders only. But you can see we touch the order block and then we print higher. And then obviously we have the power of hindsight. Institutional order flow entry drill here. We don't have to get into some complex stuff. But hopefully you can see very simply that. And we'll cover the PDF one more time, because in the PDF, I literally gave you an example where the candle opens, right? And I didn't mean to delete that, but the candle opens right here. It goes lower, and as soon as you get that CISD or breaker, you're starting to pull the trigger, right? You're looking for an entry. This is literally my model that I trade every single day. And you can do the same thing here, for example, with 10 a.m. Let's say we're still bullish. Now you have 10 a.m. opening price. 10 a.m. opening price is right here. This line right here. Focus on this line. That's 10 a.m. opening price. Let's say we're still bullish. What does the market do? It opens right here, goes lower. Where does it go lower to? This fair value gap, this higher time frame breaker. Doesn't really matter what you want to say, but the market goes lower. Remember, we don't even have to get into complex things. Simply, it goes lower and then it goes higher. Now, obviously, this is a very extreme expansion. I'm not saying you should enter this trade or whatever, but the open, low, high close is still there. We opened, we went lower, and we got confirmation. This is a bullish order block. And if you're bullish, now I'm not saying you can enter this trade because it absolutely went crazy, but the premise is still there. You can see how it opens, prints a low, and then delivers higher. Every time, every candle, always. So if you can align with this concept, you can find higher probability trades with better risk to reward, more precise entries, and it'll do you a lot in favor in the long run. I hope you guys learned something from this video. If you have any questions, feel free to leave a comment below, and I will get to see you guys next time in the next video. Take care. Peace.